Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for the futures and Forex markets. This is where we take a look at our big six markets so we can create a trading plan for tomorrow, or at least an attack plan for tomorrow, depending on all that goes on. So, before we jump in, make sure to swing on over to slingshotfutures.com, scroll down on the page, and click on the Join the Daily Outlook newsletter. That will sign you up for the newsletter so that you never miss a beat and you know exactly when it comes out and what we're looking for the next day. And also make sure while you're on here, check here in the morning, we post all of our major levels that we're going to be looking at on the futures markets that cover all of the big levels of support and resistance. Now, digging into the gold market here, we can see that gold continued that bearish trend we were talking about. So with that heavy bearish trend still in play, we're continuing to the downside once again. And we can see, based off of the bottom, right, transpose that line to the top, they tried to get up into the channel highs. Now, they have since missed, and it looks as though, at the moment at least, they may be forming a slight little wedge top. That all being said, we have a heavy area of supply up here for sellers to be coming in from around 1134.9 to 33.4. And that's really the big area that we want to see sellers defend if we're going to continue to the downside. We still have major objectives below at 1123.9. We came really close. And this is one of those situations, doesn't happen very often, but when a major market objective is just right there and it misses it by just a few ticks, sometimes the market just says, you know what, good enough. And then we just correct in the other direction. This may be close enough to say good enough, but 1123.9 is still open, still on the table for sellers to try to take it down, and we are getting a nice bearish turn lower. All of that said, the downside, really, this is where we need to see the sellers continue, right? We need to see the sellers defend this prior area of supply and drive back down to the lows. Now, because of that near miss down here, we may find that the buyers can't, they end up supporting it a little bit early, right? This lower edge down here between 1126 to the target at 23.9, that whole area may be where we find support, and the sellers just might not be able to get down to finish that job off. Either way, though, what we're looking for is to be a seller. I wouldn't mind getting a slightly better price now since we have had a bearish turn, but selling around that 34.9 to 33.4 area should be a nice location. Continuing on to crude oil, for the most part, really didn't accomplish a whole lot today. We opened up here, and now we're going to be closing right around here. I mean, putting it on a daily chart, this is the body of the candle, and then the wick is all the way up here, and the wick is all the way down here. That's a really nasty-looking daily candle. Now, it does have a slight bullish bias. We are making higher lows, and we are making higher highs, but a lot of that happened all in one big spike. And a lot of times when that occurs, there's likely going to be a larger correction. Now, we do have a major area of supply and demand between 51.17 and 51.06. Right now, the sellers are attempting to defend it. We've seen this level come into play several times this morning. So what I would really like to see is for them to continue it, right? Find resistance off the area, push back down into rising support, then maybe find the attempted push back up again. Right now, it just appears as though the buyers don't want to be buying this high, so we're looking for them to push a little bit lower if they do want to come in. Now, for the sell side, because of the bullish trend, you could consider the sell side to be a little bit shorter, right? Now, what I mean by that is not looking to hang on to it for a huge amount of time unless it really starts ripping. Because again, the buyers do have the bias. The issue is we may get a continuation, right? An AB equals CD leg, and that would put us right back where we found congestion from before in that area around 50.60 to 50.40 or so in that area. So for the sell side, I am looking to sell right now just based off the fact that we're coming out of a major area of supply. But if we can start breaking above that, I wouldn't mind seeing a pullback to it and continuation back up towards the top side on crude oil. And then finally on the Dow, another market that really wasn't able to accomplish a whole lot, right? We opened up here and we're going to be closing right around here. Lots of wick on the top. Not so much of the wick on the bottom, which really adds a little bit of a bearish tone. It may not look like it given the chart, but putting it on a daily chart, right, doing that little bit of candle math, we can see all of the failure happened at the top, not a whole lot at the bottom. So that may be a slightly bearish indication going into tomorrow. Now, all that said, we're stuck right now between an area of high supply and high demand, bouncing back and forth between 19,786 and 774. up to 826 to 812, and we just continue to rattle around this area back and forth. Until we get out of this location, we're going to have a really hard time finding continuation. Look at the most recent candle formations, just an absolute disaster. So really right now, I think it's safer to either buy low, sell high, or to wait. Wait for them to break out above and continue, wait for them to break out below and continue, but staying away from that initial breakout move because chances are it might not go that far. We are very range bound. So just played a little bit safe on the Dow. There's a good chance to believe the sellers have a slightly better argument just given the daily candle, but all of that said, it doesn't look that great still. Now, switching gears over to the Forex markets. Now, the Forex markets on the euro especially had a nice downtrend working its way lower. The sellers found a major area of resistance here and completed a huge objective to the downside. The objective between 37.18 and 36.69 was held very aggressively. So with that aggression from the buyers, if they come back, I'm not expecting the lows to be broken by much, if at all, before the buyers step right back up in. Chances are we're going to be transitioning into more of a range rather than continuing this bearish trend. We are still making lower lows, lower highs, etc. But we're looking a little more range bound now. The big breakout move happened early in the morning, and now we're just getting a little bit nasty. So really, I would like to sell the highs and buy the lows with an emphasis on selling the highs because of the overall bearish trend. But with that major amount of support that came in at the bottom, I'm not really expecting it to go much through it, if at all, before it pops back up again. So looking short on the EURUSD around here, wouldn't mind a better price, just a little bit up to that 270 to 314 area. Over on the pound dollar also continuing its bearish trend. This one's looking a little bit more wedge, a little bit more range bound here. And arguably, the wedge may have just tightened into something like this instead of the bottom portion. Now, in this case, the bearish trend, we had a lot of range before it started kicking off. The EURUSD was continuing, right? We had a nice move down, move down, move down. In this case, we went range bound for a really long time, then broke down, and now we're trying to continue. We are bouncing off of a major inventory area between 24,457 to 24,523, and as long as the sellers maintain this strength, this is more likely going to be a bear spike into a possible pennant and then continued spike down into the area of support below. Same big thing here. We filled a major objective to the downside in the pound dollar. So 23,830 to 765 is going to be the big area that we want to see what the reaction is. Do the buyers want to hold it and bounce higher, or are they going to crack through like we saw last night, retest it as resistance and carry on their way? In this case, it looks a little bit more exhausted to me. Overall, the sellers seem to have put a little too much emphasis on the downside and didn't give the buyers enough of a chance. So more likely than not, we should go into a range or a correction up before seeing the sellers turn back down. Now the area, again, 24,523 to 457 would be a nice zone to be looking to sell in to drive that market back down if it wants to catch a little pop higher. Otherwise, spike, little pennant formation, and then a breakdown again would be what we're looking for after that. And then finally on the dollar yen, very strong bullish momentum to the upside, but we're ending the day sort of range bound. We had some really nice bullish trending, higher lows, higher highs, higher lows, but then this happened, right? We formed a little bit of a lower high. They missed it by just a little bit at the highs and saw a major reaction to the downside. Now, that all said, the sellers couldn't accomplish a move below that major swing. So really, this ABCD correction back into a bullish move, this could just be a big pullback before they finish the job off. That is forming a larger wedge on both sides, but at the same time, what is it more likely to do now, right? If you were a buyer and you bought all the way down here, or maybe you bought along the way and you saw it fail to get a new high and pull all the way back down, you're probably not going to hang around if it goes back up to the highs, right? So there's more likely going to be a lot of selling pressure up here at around that 118,668 area for all of the buyers that have been patiently standing by, waiting for it to come back, and then they look to exit because they've been given proof that the buyers have lost a lot of grip. It looks way different than it did this morning. Big move up. It had a big correction, but then it ground all the way back higher. Big move up, big move down, taking all of it back. Then they tried to get it again and they failed to get a new high. Yeah, that doesn't look so great. So overall, I still want to be a buyer, but chances are at the moment we need to break out of this area of resistance between 118, 166, and 135. I would like to see a pop above it, pull back as support, and then finish the job off to the highs. And then when we get to the highs, it might not be so bad to look to possibly sell given the overall range sentiment, right? Maybe sell a little bit higher because it does have a bullish trend, but looking for some form of resistance up here for another push back down so the buyers can buy at a better price. So that's going to do it for this one. Hopefully you traded with your plan today. Today was a little bit of a slow, grindy one. The market was sort of digesting all of that news that took place yesterday with the FOMC and the rate decisions and all that fun stuff. But now that that's out of the way, we got more than enough time to kind of finish off this week nice and strong. So heading into tomorrow, make sure to make that plan, trade the plan, follow those rules, and you will be just fine. Until tomorrow, we'll see y'all later.